I will tell you this, Howard, with 100%, humanoids will be in your home in the mid to late 2030s at a reasonable cost. They will do everything you can imagine from, yes, taking your trash out. They will prepare food for your family with the mind of the greatest chefs in the world. They'll be able to make a Michelin star meal in your kitchen. They will clean it. They will clean your house. They will do your laundry, fold your clothes, put your clothes back in your closet. You're going to look back at 2024 and think that the way we were living was prehistoric.
Welcome, everybody. Trends with Friends. We are doing these shows now on Tuesday to air on Thursdays. When this show airs on Thursday, NVIDIA's earnings will be out and the world will be over. So watch it quickly. And to talk about the world of AI, robots, social trends, I invited today Trends with Friends. JC, you're just meeting them. Phil knows them. Long time, really social FinTwit, early adopter. Has written a bunch of books on social trends. One of the best traders I know, runs a early YouTube channel called Dumb Money, which is great. Was the first call to me about a movie we produced together and lost some money together with, but created a great work of art called This Is Not Financial Advice. I don't hold him accountable for that. When you have great friends and you have losers and you're still great friends, you have winners, but you still have losers. Phil, great friends in investing, you're going to lose money. And so true great relationships get through those things, and we know the risk and rewards of these things. And that's kind of part of what we're talking about on Trends with Friends. But welcome, Chris Camillo. He's live from his closet in Dallas. He's a shoe dog. I can see right away he's a shoe dog, and JC can appreciate that. Hopefully he has a Miami. Do you have a Miami Nike shoe there? So JC feels okay about himself.
I got some around here too.
Is that one JC, Miami enough for you? I don't know. I got some Miami looking shoes here.
That's a little Wynwood, little Wynwood-ish, if you're familiar. I got the Miami Wynwood. Vice Air Force Ones. Yeah. Those are dope.
Well, Chris is no one goes deeper. Chris, Matt, Ober, and I are really good friends. Chris likes to go all in, but he likes to go all in very deep detail using as much data and signal as possible. So we're going to get into that, but I'm going to say, Chris, like I said, has been in Dallas. I don't remember when you first got into trading. You are an entrepreneur at heart. And I want to just get right into it. You're a collector, you're an entrepreneur, you're a local Dallas celeb with, a great old bar that you own in town, father, a YouTuber. What has you excited today? I asked the guest quickly, what's the highest conviction, big idea that you're working on? I know it, but let's share it.
Yeah. So, the highest conviction thing I'm working on, and it's relatively all consuming for me right now. I feel like it might just be the biggest thing that I've ever focused on, is the kind of physical extension of the AI trend that we've seen the last year. So it's AI robotics, specifically humanoids. It's the commercialization of all the world's physical labor that I believe will happen over the next 25 years, primarily through the humanoid form of robot. And I know that makes me sound like a crazy person to some extent, but it's not so crazy. And, I could talk you guys through it.
You fit right in on this show, by the way. A little bit crazy. Yeah. It's perfect.
Well, yeah, where we want to go with Trends with Friends is we get JC takes us down, top down, and we can see the trends happening. JC has been talking about it from the industry. He's going to love this robotic thing because I think it ties into industrials and what America does well and Germany might do well and everybody might do well in the world of manufacturing robots, or just Tesla. You'll tell us. But I think the question with the high conviction idea is time frame, right? When you say 25 years, is today, how do you invest today and how do you invest in 3 years? So how are you thinking about it? To walk us through this.
Yeah.
Because there's private investments and public.
So first off, I think, Howard, but maybe not everyone knows, I call myself a social arbitrator, and my entire background in trading has been based on my ability to surface shifts in culture, shifts in technology, shifts in consumer behavior, um, being able to surface those things early and then connecting the dots to investable opportunities in the market. Whether they be sector specific or equity specific. So that's essentially the guts of being a social trader. It's trying to enter trades when there's an information imbalance in the world, meaning that, for whatever reason, the market doesn't see what you see, and then exiting those trades at the point of information parity, when that information that you were trading gets fully disseminated to the investing market. So that's a simple way of saying it. But I've always tried to be a little bit early to things and really cut through the noise. I don't read business papers. I don't watch CNBC. I don't pay attention to anything in the financial press at all. To be a good social arbitrator, you just have to be deeply connected to the real world in a way that is somewhat difficult for financial professionals to do, because a lot of times financial professionals get caught up with a lot of noise. So this one in particular,
I call it Larry David of finance. You fit.
Yeah,
I like to. Good. I think if the four of us had a celebrity to choose that relates to this, it's Larry David. JC does it in his way. Phil does it in his way psychologically, and you're doing it with social arb. And I'm a social arb. I'm just not a good trader.
You're saying because we're like in our own world, like I'm looking at the data, he's deep in the weeds of it. Howard talks to a lot of people and like just pretends.
What do we have in common though? We may like Josh Brown. We're not watching Josh. We love Josh Brown to hang out for dinner with him.
I watch the YouTube channel. You don't watch Batnick?
YouTube, but you don't watch him when he goes on CNBC.
Well, I don't have basic cable. Like I wouldn't know where to watch that. But like on YouTube, I watch him.
Yeah. So how do you decide, Chris? So we're going to talk about this trade you're in and how you're playing it. How do you decide? Because there is so much signal, and it could be for Crocs or it could be the Barbie movie that we've talked about. But how do you decide how many of those are worthwhile taking in a world full of the ARB? So just as a guy who has other businesses, how do you decide when it's time to put on social?
So there's
ARB?
a few things you look at. You come across a piece of information. You mentioned the Barbie movie. Like I did. Many months, about 7-8 months before the movie was released, and I had identified that this was a movie that was generating more social buzz than any film I had seen in probably a decade pre-release. You have to make a determination is, will this event move the needle for a company? In that case, it was Mattel. Will it actually move the needle for a company? To what degree will it move the needle for that company? You also have to determine what else is happening at that company that could be more significant than the piece of information you're trading, right? So that the information you're trading might just be one of 3 or 4 big things happening. Or it might be the most important thing. It might be so important that nothing else really matters. The last thing you have to determine is, to what extent does the world see the information that I'm seeing right now? Do they agree with it?
And then what vehicle to choose to trade that?
Yeah, that as well. So, in terms of vehicle, the decision to trade equity versus, let's say, options is really determined upon, one, your confidence, obviously, but also what I call the social arb window. The time frame for which you believe the information that you're trading will be disseminated to the market, right? In the case of the Barbie movie, it's really simple, and I did trade options because the dissemination window was approaching the release of the window. So I had this idea of trading Mattel about 5 months before the movie came out, and the concept was always to exit the day of the movie release, right? Or the day before the movie release. And that's exactly what I did. And, I had options in Mattel, and I basically rode the stock from like 16.5 to 22 in that period with options.
I remember.
So this is something that I've done with about 70 stocks over 17 years. So I think there's been about 70 high conviction trades over 17 years. And at Howard, as you know, I've averaged just about very close to 70%, about 68% annualized returns over the past 17 years. So it's been a really fruitful methodology for me, and something that I'm really proud of. But every once in a while, there's a bigger theme, a theme that doesn't play out over weeks and months, but a theme that plays out over years. And a good example of that is, cloud computing. So, in the mid 2000 teens, I had developed a very strong thesis around cloud computing, made some really large bets around Amazon and Microsoft at the time, which obviously played out pretty well. But those are social arb bets that don't play out over months. They play out over years. At the time, I was monitoring the volume of conversation that technologists were having around AWS and cloud computing on technology web boards on Reddit. And so I was actually measuring that quantitatively on a monthly basis and watching it build over the course of years. And you know that, Howard, because I used to have a company, Ticker Tags, that did that, right? We would measure the volume of the world's conversations around highly granular topics, and we could actually see the momentum of those conversations. In some cases, the measurement is of a certain group because it's a very granular, we're not measuring it on Twitter, we're measuring it on, maybe 50 different web boards where a bunch of, technology nerds who are responsible for, spending, technology money at their company where they talk late night, right? So
yeah,
what I do is so random. I could be talking about robots one day, cloud computing the next, and I could be talking about Crocs the next, right? Or the Barbie movie.
Yeah.
So it's super opportunistic.
Yeah. So the robotics thing is so fascinating because it operationalizes the technology, right? You're saying, hey, there's a specific thing happening here. So I'm curious if you have thought about the specific variables that are critical to investing here and have sort of mapped those out. One being time frame. Obviously, this is a longer time frame thing. And asset. Like, is this something that's like pre-asset for you where you're just doing research and you haven't decided how you're going to express this in the market yet? And so forth.
Yeah, so it's actually something I'm just really fortunate because I happened to have been introduced 6 years ago to an individual and a company that's in the private market that was building humanoids. And at the time, I just laughed it off. And then like a year later, I laughed it off. And a year later, I laughed it off. And I laughed it off for like 4.5 years. But I had this kind of prepared mind of thinking, well, maybe there's a 1% chance that in my lifetime this could happen. And something really interesting happened over the past couple of years. And that's on the hardware side of robotics, actuator technology. Actuators like the muscles for a robot, sensor technology, a whole number of things that are involved with robotics improved dramatically over the past 2 years and got significantly cheaper. And, every 6 to 12 months, I go down to Austin and I speak to the CEO. In the last couple of years, he told me, he said, hey, it's happening right now. I said, what do you mean it's happening? He goes, well, our old humanoid cost $350,000 and now we have it down to under $100,000. And within 3 or 4 years, it will be $40,000 to $50,000. And this is all pre-AI, right? This is before the AI boom that happened this last year. So there's still that huge issue with software, but he had some ideas around software. And I thought, this is kind of interesting. I started looking into it more. Where this world really broke out was in early 2023 when AI hit. And that's when we all realized that, the one missing function of these humanoid robots, which is the brain, was going to be solved. Fast forward 12 months and here we are in Q1 of 2024. And there are multiple humanoid companies in the private market that are launching their first commercialized pilot test in manufacturing facilities this year with humanoid robots on the production line, leveraging visual, physical AI to visually learn from watching humans perform tasks and then replicating those tasks in humanoid format. And I've seen it up close in person. There have been videos that have been launched in the last 4 weeks that have showed a little bit of this. And I'm telling you now with 100% confidence that within some period of time, humanoids will displace more or less all physical labor on Earth. That's now a guarantee. We can debate what the timeline looks like, but understand something that human labor is the largest industry sector in the world. It accounts for $30 to $50 trillion a year, roughly half of the world's GDP. So we're talking about commercializing human labor and launching an industry that will become the largest industry we've ever known to be commercialized. I have some fairly, strong thoughts of how this is going to play out and when it's going to play out and who the beneficiaries are going to be. One of them is in the public market right now. But this is happening, guys. And I think for most people, if you haven't been around a random humanoid CEO the past 6 years, you would be like, this is sci-fi. But it's not. And I think the only reason why I can see it is because I was exposed to it. So my mind was open to it and prepared. We're going to talk about Tesla, obviously, in a minute. And I think the big issue with Tesla is Elon has said things that have been wildly wrong and off, specifically autonomous driving, right? Like we all know it. He's been talking about it for 11, 12 years, and he's been just dead wrong for 11 or 12 years. So when Elon comes out this last year and says, hey, we're going to have over 1 billion humanoids on Earth by 2040, you think, oh, that's just Elon being Elon, just like this autonomous driving. And I wouldn't listen to him if I didn't also think and know separately from Elon that we're going to have over 1 billion humanoids on Earth by 2040. It's so I think Elon shot himself in the foot and that no one listens to him anymore when he makes these big proclamations. But that one is actually true.
The boy who cried, humanoid. Yeah. So just taking a step back from that, because now it's about trends with friends, and I agree with you because you've shared the company. We'll talk a little bit about Tesla. I'm an AI pessimist right now, meaning I think the market's priced in the perfection of where AI is right now and overshot it. Again, that's just timing. I hope the market goes up. But the easiest way, if humanoids are going to be on Earth, I think about stock-based compensation and cash compensation and crypto, and I'm like, these all explain why the QQQs and XLK may still be the best play, because you don't have to predict which of the FANGs or whatever Magnificent 8 or 7 win. They're all going to win because their stock-based comp's going to go down because they don't have to pay stock to robots, and they can use a blockchain to pay, to fund all this stuff. So there's all those interesting extra parallels that are so hard to predict, but they're going to come along with humanoids. So it seems to me like the bet still is QQQ. You like Tesla because he's being accused of crying wolf now too much on tech. And what's his upside? Why is he best positioned?
Yeah, so I put out a 15-part tweet thread about 3 weeks ago, and it was on the Optimus division, which is the humanoid division of Tesla, and why I thought it would be valued at $10 trillion, just the Optimus division by 2030, the end of 2030. Sounds outlandish.
And that's inside Tesla. That's probably why he wants more stock.
Yeah, it's inside Tesla. Elon has already said that humanoids will be meaningfully larger than his automotive business. That's just a given. I mean, I've never been a fanboy.
Yeah, it has to be.
Yeah, I've never been a Tesla fanboy. I've never really been hyped about the automotive division of Tesla. I think autonomous driving is going to be huge, but it might not be huge until 2038, right? So I've never been like big on that. But this Optimus division at Tesla, I've crunched the numbers, and what you have to understand is they won't be selling humanoids. There's a new model called RAAS. It's robots as a service. And you should get used to that term, because robots as a service, I think, will become the largest industry we've ever known. And the the supply demand on humanoids will be so out of whack the first 7 to 10 years that they'll only be leased by the hour. The projections right now are that humanoids will be leased for somewhere between $14 and $20 an hour, all in. The equivalent cost of human labor is roughly $30 an hour after taxes, insurance, and in many cases, a lot of these manufacturers are actually paying agencies a 20 to 40% premium for their labor because they just can't get labor. So they're paying whatever they can pay just to get labor in the door. So I want to make something very clear. This is not about displacing human workers, not for a very long time. The job shortage when it comes to labor in manufacturing, logistics, warehousing, certainly care workers, and agriculture, depending on who you listen to, is going to be somewhere between 60 million and 350 million globally by 2030. You're looking at trillions and trillions of dollars that are being lost in the economy due to lack of labor. And if you were to sit with any of the world's largest global manufacturers or logistics and warehousing players and say, hey, where can we help you with this form of robot? They'll say, well, how long do you have? Because every facet of our business, we are absolutely desperate and losing sleep over the labor shortages right now globally. So this is not a product market fit issue. The product market fit is solved. We already have demand for tens of millions of humanoids today, right now, at that hourly rate. All that needs to be accomplished is pilot programs that are already in motion, that are going to happen over the next 24 months, have to prove that these humanoids can perform useful work reliably and safely and consistently at human speed. They're currently performing this work at 40 to 65% of human speed. We're just scratching the surface on visual robotical AI. NVIDIA is kind of going to be one of the leaders in that space. So we're going to see a rapid improvement over the next 6 to 12 months in how these humanoid robots are able to replicate human behavior on factory lines. And I just don't see any situation where we do not achieve that human speed reliably and safely with humanoids over the next 12 to 18 months in these pilot programs that are happening. I could discuss them. I'm an investor in a bunch of these private companies, but I can tell you what's been leaked by the press. Bloomberg, as of a week ago, leaked that one of these companies, Figure, has a global deal with BMW. They're putting humanoids on the line. That's happening this year.
Right. It's not just Tesla. It's Mercedes, BMW.
It's all of them. Howard, it's every manufacturer on Earth is attempting to get a humanoid.
This goes to the industrials. This goes to why JC's been shouting out industrials. He doesn't care why. I mean, my job is to go deeper than just the top down that JC's been talking about. Like, the industrials have led this market for hundreds of years, and this could be their move into tech. Because you're going to have to build. You still got to build the robots.
Yeah,
right? And maybe that doesn't get done in China.
You have to build the robots, but the goal is to have, and everyone say this, to have the robots building the robots.
Business model.
So,
and then a business model, which is the SaaS.
RAAS,
so that's cool.
RAAS.
Yeah, it's Rasputin as a service. All right. So on a granular level, I love it. I mean, on the highest level, I love it. You mentioned NVIDIA, Tesla. For me, it's QQQ, XLK.
But why don't we just dig into the financials a little bit? You have a humanoid robot that costs, let's just call it $40,000. Now, we all think Tesla will be able to get that price down to $20,000 or sub $20,000 in time. But let's call it a $40,000 humanoid. The amortization of that humanoid will be somewhere between probably 6 and 8 years. The maintenance on that humanoid, let's just call it $3,000 to $6,000 a year, so $5,000 a year, and it will be forced use for at least 20 hours a day at that $16 an hour price. So you'll have to pay for 20 hours a day. If you use it for over 20 hours a day, you'll probably get a discount. So it's going to be the inverse of overtime, right? That equates to roughly, I think I want to say about $95,000 a year in RAAS on something that costs $40,000 and has a 6+ year amortization. So think about the margins. We're talking about, 95% margins on a product with.
And the tax advantages, the way you're going to account for that is genius.
Well, so yeah, the hourly rate that I just threw out there would actually be a meaningful savings to end clients over what they're paying human labor. It's actually a super meaningful savings. So you could theoretically have
no, but then you get the amortization too on the
But this will be one of the world's most profitable products. I mean, next to cars, it's a total joke. Like Tesla would just stop making cars completely. It just transits all their lines right to making humanoids. I have it at like a 60 or 70 PE. In 2030, I only have Tesla having produced a total of 1.5 million humanoids by the end of 2030. That is a very small number. Okay, so just to put this in context, a humanoid is about 1/20th the weight of a vehicle. So 1/20th the material. It's, I think, roughly.
So it's like 300 pounds, 200 pounds?
No, it's not that much. No. A humanoid is about seven. I think it's about, I want to say 100. It could be about 120 pounds or so, 130 pounds. So it's much less complex to manufacture than a vehicle. It's more complex than a phone. It kind of sits between the two, but you can easily produce tens of millions of humanoids on an annualized basis. So this is simply having 1.5 humanoids in the RAAS model by the end of 2030 would generate for Tesla at a 70 or 80 PE would put that division as $10 trillion based on EBITDA and the margins involved with it. We've never seen an industry like this. The barriers to entry are exceptionally high because we have years of hardware innovation going into these humanoid manufacturers. There's only a few in the world that have excelled at this, that actually have walking humanoids today. Outside of China, I can count 5 companies globally that have a humanoid that could actually walk bipedal, have good balancing, and have less than that, have articulation. Tesla's humanoid, the Optimus, will be able, Elon claims, will be able to thread a needle within the next 12 months. So the articulation already is just phenomenal. If you've seen some of the videos of these humanoids folding clothes, we had one have a video last week, 2 weeks ago, making coffee after visual learning from watching a human make coffee. So that's not the use case for it. It was just kind of to show something fun.
I was just looking up Intuitive Surgical, 133 billion, and they do something as simple as heart. Well, not simple, because things go wrong, but it's breaking out to all-time highs. That's another robotics company just for the heart, ISRG. And I think about when you talk about this, I think Phil and I go back to the Jetsons, 1962. Imagine you telling this story in 1962, because they fucking created Jetsons, which was humanoids, right? Jetsons had humanoids. Remember on the conveyor belt at their big house in the sky, Phil, bringing lemonade
Rosie,
and water.
Rosie, the housekeeper.
So
I hate to age myself, but that's 1962, 3 years before I was born. The idea of a humanoid was born in a cartoon that is pretty much where you're saying Tesla is only at today. So getting this right is one thing. How to directionally you're right. The question is, it sounds like Tesla and NVIDIA, are interesting plays there in the public market.
Here's the really interesting part. There's so many layers to this, Howard. It's just fascinating. So the reason why capital markets will not accept this until it's directly in front of their face is because humanoids have been the joke of the robotics industry for the past 40 years. So
yeah, Phil will comment on this. This is just the psychology.
Yeah.
Of it.
So if you were to ask any venture capitalist that's had a conversation with a machinery company or a robotics company in the last 30, 40 years, the number one thing they will say is, whatever you do not attempt to build a humanoid. It has been the graveyard of ideas for the last few decades. No one's ever done it. It's a waste of money. It's too complex. It's always been a big joke. So it's like this thing where if you even say you're involved with humanoids, you'll never raise $1 of capital, right?
Yeah, the only thing I have to add here is exactly right. I mean, from a human behavioral point of view, it's Howard, you actually alluded to it before. It's a boy who cried wolf. You hear the same thing over and over again. And then you just think, well, this is bullshit. One more time, bullshit. And then you get very lackadaisical. And then all of a sudden, finally, it hits you in the head and you didn't see it coming. And yet, the only other point there is also that our ability to imagine it, going back even before the Jetsons, right? Going back, years and years, H.G. Wells and so forth. I mean, going back 100 years, just the ability for us to imagine this. It's just such a wonderful thing.
Well, and here's the thing about imagining it. I'll just give you a real world example of a Howiestown, because JC will appreciate this. Everybody wanted when you had your first friend that had a movie room 10 years ago or 12 years ago, it was rear projection. Didn't fucking work. There was 9 pieces of hardware.
Who had one of those. I didn't have any.
Yeah. That's a Cuban problem, not a JC problem.
We don't have basements in Miami.
You had good sandwiches. So your first friend that had a movie room, you were like, that was a fucking luxury item. There was no streaming yet. So it was so dumb. But people did it, and it cost hundreds of thousands of dollars, and they had to dedicate a room with leather couches and the whole fucking experience and blah, blah, blah. Today, in Howie's house, I have I didn't know it was called a snug room. I have a snug room. The cost of said room was zero. Relative. It cost you $1,000 for a 90 whatever TV and a Sonos and an Apple, remote player and a restoration hardware couch and some blackout shades. And you have that $100,000 room for $2,000. Forgetting the furniture, right? Which is fine because restoration hardware is art furniture, right? So the same thing that took 20 years in media is now compressing, meaning I just got a snug room and Apple released a $3,000 movie on my face product, right? Where I now can carry a movie room. This goes to humanoids, right? Like when it happens, it's like all of a sudden. So there went from a realm where like a movie room, that seems like a lot of work, to like, you got to build an extra room on your house and it's got to be like a big room. And it's just half the fucking stuff doesn't work when you really need it. And your technology is outdated before you get it working, to all I need is this. And I think that's the kind of stuff you have to start believing that can happen in other industries.
Yeah.
And you're right.
And by the way, I'm talking about commercialized humanoids because 100% of the allocation is going to go towards commercial use cases. I would believe the first 5 to 8 years. But there's no doubt in my mind by like 2035-ish, we should start having some allocation available for home use. And I will tell you this, Howard, with 100%, humanoids will be in your home in the mid to late 2030s at a reasonable cost. They will do everything you can imagine from, taking your trash out. They will prepare food for your family with the mind of the greatest chefs in the world. They'll be able to make a Michelin star meal in your kitchen. They will clean it. They will clean your house. They will do your laundry, fold your clothes, put your clothes back in your closet. You're going to look back at 2024 and think that the way we were living was prehistoric. The amount of our lives that we spend. No, seriously.
I have so many jokes to insert here, and I'm just biting
but the
my tongue.
amount of our time that we're still spending as humans doing menial human labor task is obscene.
Totally.
It's obscene. No matter who you are, how rich you are, the amount of time that you spend just doing crap, the same crap every day around your house, that will never happen again. If you fast forward even 15 years, I think.
It's accelerating. The unlocks are coming. The unlocks. I say this in venture, you have to have an unlock, right? I just invested in a company that's a little ahead of its skis, Dorsia. It's a food app. And I said, they need one more unlock. Like, it's overpriced, but if he gets one more unlock, it's underpriced. And I think we're at that stage in tech where you go from, oh my God, this is ridiculously valued, to an unlock that says, kind of like Uber with UberX. Like, things started happening that were unlocks at much faster pace, and then ZERP and other things throw it off. But very cool discussion. I want to move it on to talk more about now today's world. This is a fascinating topic. JC, anything add there?
Quick question before we move on to equities markets. Chris, when am I getting the chip? Like, just one, like the chip. When am I getting that?
I don't know that that's in our reasonable lifetime. So I
really?
I try to kind of ignore that stuff. I think it's kind of somewhat cool. I think it's also inevitable, by the way. But I would
totally get it. Perlman thinks I'm crazy. I would get it in a heartbeat. Let's go. Give me the chip.
You don't need it. And what would go with the chip? A white wine? Or if you're a chip guy, do you put a white wine at night with the chip in your brain, or a red wine? What do you put with that?
Well, it depends on what's for dinner, Howard. It's not that simple.
Oh, so it doesn't have anything to do with the semiconductor and the sand and all the other stuff that goes in your head.
It could. It's just there's more evidence that I need to make a decision like that. That's an important decision. It's one of the most important decisions I make. What wine am I drinking?
You had something to say?
Yeah, I have a question for Chris. Yeah. So here's the thing. So I'm an idiot, right? I'm just very simple, right? Yeah. I've been investing in, low fee, broad market ETFs for a long time. It's a beautiful thing to do. And the majority of people in the world who are investors are employing similar strategy, right? They put money into their 401k, they put money into the Fidelity or wherever, and they just pile it away, and it goes into these broad market ETFs. Howard mentioned QQQ may have more, but and I asked this to Parek too, in a more of an AI sense, less in a robotic sense. I remember when the internet came out, and there was like every year we were getting more efficient. All of these companies had operating efficiencies that were improving out of nowhere all of a sudden. Companies that had very little to do with technology, industrial companies to sort of JC's play, or retail companies or whatever. They were getting better with logistics management. They were getting better. So this seems like a similar thing, but on massive steroids. Like operating efficiency, this is something that's going to have a long tail. It's going to affect every single solitary public company that exists. Their operating efficiency is going to improve like crazy potentially. And so if I'm just an investor in, the Wilshire 5000 or the VTI or whatever, it's going to have an incredible, profound, positive long-term effect.
Here's why it's like perversely working better than you would think. Because to Tesla and to Apple and to Amazon and to Google, interest rates don't matter, right? Now, the perverse side of this, Phil, is innovation will drop because as interest rates have to stay up, I mean, they're going to come down because the government's broke. So I think we've kind of peaked, but say they haven't. The benefit goes, they're using cash off their balance sheet, right? Like they can still borrow at less than people think about. And this time around, ZERP got all these guys over the hump where now we can get, even in a higher interest rate environment, these benefits of technology, which is just, everybody wants to be negative, but there's so much built-in growth because of this technology. There's so much that can't be put back in the box, I would say, Chris. Is what I'm saying.
You nailed it on the head. I like to call it the age of abundance. And I think I didn't coin that. I think other people are discussing that as well. I see us entering
guy with 40 shoes behind him. Yeah. The age of abundance makes sense.
No, but I do see us. Do see AI and robotics and humanoid robotics and automation bringing us into this age of abundance over the next 10 to 15 years. And I think that does have profound impacts on, our economy, global economies, efficiencies. Yes, I think it comes with a lot of weird things like universal income. I think that's inevitable. But I think the most important thing, if we enter this age of abundance, is to be in the investor class and to have money invested in capital markets, because capital markets, this will be the biggest boost to capital markets, I think, maybe in our lifetime. So because of everything that you're saying, right, with just the efficiencies are unimaginable once we start to eliminate human labor.
But uneven as ever.
Uneven, yeah.
The wild card here is how uneven it's going to be. Meaning, as a consumer that has income and as an investor, times may not be better if we can put up high enough walls around our house to survive the hate that's coming our way. I'm being silly, but at the same time, there's some truth to that, right?
It comes with volatility for sure, because what we've learned is that even if this lifts everyone, if it lifts everyone up, if it lifts some up more than others, it's going to result in volatility culturally, right? Because even if everybody is 50% better, if the people at the very top are 500% better, which they will be, 5,000% better,
correct,
that will create a dynamic that will be really tough to swallow politically and culturally. So yeah, I agree. It's a concern, even though the reality is it's better for everyone.
I mean, this shows trends with friends. We're not trying to tell you where stock prices are going. We're trying to talk about the biggest trends. So this was fantastic. Within the confines of that, let's talk about where we are today, JC. Let's whip us through, and Chris, chime in as you see fit. But as a trend follower yourself, I like going through the weekly to do. 2 weeks ago, JC, you flipped a little bit, saying it was fun to be bearish. You had some bearish ideas on. Is the divergence has calmed down? Has something renewed in the upwards trend, or are you still seeing the
no? I mean,
possibilities?
I continue to see the market deteriorating. I've been in the camp that we've been in a correction already for a couple of months. Somewhat of a stealth correction. You may have started to see it at the index level over the last couple of weeks. Dow futures fell 2 weeks in a row, for example. Last week, the NASDAQ didn't make a new high, neither did the S&P 500. The New York Stock Exchange Composite did, which is, again, it's not like there's like this magic indicator that's going to tell you, hey, we should be spending more time looking to, for stocks to buy versus looking for stocks to sell. Like, what's the magic indicator? There is none. It's really a weight of the evidence. So I could give you bullish arguments, like, for example, the new lows list has not expanded yet. This is what I love about this one. And if you want to scroll down to where I am, let's look at the Russell 3000 and the New York Stock Exchange Composite, the new lows list. Mathematically, it's not my opinion or anybody's opinion. Mathematically, you cannot have a correction of any kind without stocks going down in price. Like, that's just math, right? So without an expansion in the new lows list, again, mathematically, you cannot have a major correction. And maybe it's more of a sector rotation situation, a consolidation sideways, a correction through time versus price. That's certainly possible. Again, without an expansion in new lows, you can't have a real correction. Now, I'm not looking at the new 52-week lows list because there's nothing happening there. Stock market just made new all-time highs over the last month, right? So we're nowhere near new 52-week lows in most stocks. So there's not going to be much happening there really anytime soon, most likely. We want to look at the 10-day new lows list, a 21-day lows list, 30-day lows list. You have to start somewhere. You need an expansion of some kind of low in order to really see a correction. So this is probably, alongside with the New York Stock Exchange Composite making new highs, probably the most bullish of arguments. Now, if you want to go all the way to the top, I would love to hear your thoughts, guys. Chris, yourself included, Pearl Dog, Howard, I think you all have maybe opinions to chime in here. I'm old enough to remember when Apple was a big deal. In fact, Apple was the biggest deal. And by the way, that wasn't like a decade ago. That was like as of like a few months ago, Apple was the biggest deal. I'm seeing Apple making new 3-month lows today. I am seeing it making new lows every day relative to the S&P and the NASDAQ, just completely collapsing on a relative basis. I seem to be the only person who cares and is old enough to remember when Apple was a big deal. Can you guys tell me that Apple doesn't matter and the market's not going to respect what Apple's doing and Apple's not a leading indicator? Is anybody here going to make that case? Or is Apple completely falling apart a big deal for this market?
I don't think it's falling apart. I just think it's digesting a shift, right? They don't have, they're not serious yet about AI. But the chips, they're going to come at it with chips, right? And their phone. So I just can't get excited about the stock going sideways to down because it's not cheap, right? And just the healthiest thing that could go on right now is something else in America surfaces that's not Apple. But in the end, the stores, Apple's a retail nation. Look what Chris has got behind him in Nike. Apple is an institution. It's LVMH meets technology. It's fasciology. It's the original of the original. It's fasciology. And so the good news is Apple can go down or sideways for a month or two, and the market, it's not dragging the rest of the market down. The market's only, so as much as I'd like to be dramatic about it, it's actually pretty healthy that we're not talking about Apple every minute. And in fact, we rightfully can make fun of it a little bit for the Apple Vision, which is kind of a botched launch. I don't have the product, right? It's two in a row for me, the watch and but man, their desktop computers, their laptops, and the store make it something that I can't bet against America because that's what you're betting against people walking into that store every week.
But if Apple's below 180, I'm shorting the crap out of it.
That's understandable for you for a trade, but it doesn't make me nervous.
So you think
I think it's a nothing burger.
Apple could drop down to new 52-week lows, and the S&P 500 and Nasdaq are still making new all-time highs?
Oh, I don't know about that. I'm just saying I don't think that's going to happen. I think Apple's overvalued based on the product releases that it has. But they have so many tricks up their sleeve because they're verticalized.
Howard, we could be at new 52-week lows in Apple in a couple of weeks, easily.
52-week low. I think we'd revisit it then. I wouldn't be adding on this dip, but I guess we just disagree. I don't think it's that important right now.
You don't think it's that important to the market, Chris? You think it's an important stock to the market?
I think NVIDIA is more important but hang on, NVIDIA just passed Google and Amazon. That's the story. Apple fading a little bit is not the story. But Chris, what do you see as a trader?
So it's a great question, and my answer to you, Howard, is I don't care and I don't pay attention to any of this stuff. Not to like demean people that do, but but you have to understand. I'll make between 4 and 8 high conviction trades a year, and I don't care what the stock market does. I never have. I don't pay any. It's all noise to me. Because if I start paying attention to this stuff, I'm not going to be good at what I do, which is seeing things clear. Like, I traded Elf Cosmetics, right? It really didn't matter what the market did because I knew that Elf was going to have the biggest quarter. I've done this a dozen times with Elf over the past 8-9 years. And the reason why I'm able to do that with companies like Elf Cosmetics and Deck with Uggs and Hoka shoes, right? And on running is because that's all I do. I don't look at the stock market. I don't care what the stock market does day to day. I don't even know what it does day to day. And I don't care if it's down 20% this year or up 20% this year. It's not going to impact me. I'm going to only invest in something if I see something extraordinary that's underlying that company's business that is going to be meaningful regardless of the market. But so I'm sorry, I'm not a good person to comment on this.
No, it's good. It's good that you mentioned this. In fact, this is such a Perlman thing. Exactly what you're saying. Like, focus on you, right, Perlman? This is right up your alley. What he's saying. This
is exactly correct. It's like whatever your thing is, whatever you're looking at. You're looking at price behavior, right?
Yeah.
Chris is looking at social inefficiencies in the market. Howard's looking at trends. Big trends, big retail trends, fashion trends, private market trends, whatever your thing is, keep looking at that. I mean, from my point of view, to answer your question, hey, the Qs are up in the last 9 months. they're up 50% or whatever they're up, and Apple's flat for the last 9 months. So to me, I don't see that it's, it's an important stock, but it's not necessarily correlated with the last 9 months of behavior. For Chris, he's looking at something totally different.
Well, what I'm reading in Apple is it's the healthiest thing that's happened in a while because the market can go up.
Well, to be clear, Apple peaked in December, and the day that Apple peaked was on December the 14th. That was the day that the new 52-week highs list on the New York Stock Exchange and the NASDAQ also peaked. So ever since then, it's been breadth deterioration ever since, fewer and fewer new highs. So Apple, whether we like it or not, or whether agree with it or not, is actually a very good representation of the stock market, as that was the best things were on December the 14th. And it's been deteriorating ever since, not just in breadth, but in Apple. They're both market breadth and Apple are doing the exact same thing. If you want to look at the new highs list, look at the New York Stock Exchange composite new highs list, just deteriorating to the point where, last week there was a day or two maybe where the market made a new high, or maybe it was 2 weeks ago. There were just no stocks that made new highs. Like it was like, we make a joke like go and count how many stocks made new highs. It didn't take very long to count them because the list continues to get shorter and shorter and shorter. We're just not getting any breadth expansion whatsoever. So this is the one that I think is the big one. I can't have a real conversation. Go to the high yield bonds. I can't have a real conversation about the stock market without talking about bonds, right? And that's not just cherry picking this current market environment. How long have you guys known me? I've always been that way, because every cryptocurrency in the world can go to zero tomorrow and it won't matter, right? Because it's only a $2 trillion asset. Might as well be zero. The bond market, now we're talking 130 trillion. This is a real asset class. And by the way, that's not to hate on crypto. I'm long, I'm in, but just put things in perspective. The crypto market is irrelevant compared to something like the bond market, which is going to be the bully that's going to be moving the market around. So you might not like that. The way I look at it, the bond market is a dictatorship. The bond market doesn't care about your fundamentals. The market doesn't care. The fund doesn't care about your earnings projection. The bond market is going to do what it wants to do, and the stock market is going to have to act accordingly. So when you see the blue line at the bottom, those are credit spreads, right? Upside down. So that's high yield bonds outperforming treasury bonds. That's evidence of risk appetite, right? If investors are willing to allocate assets towards junk bonds at a faster rate than the defensive nature of the treasury bond market, that is not bearish, right? That tends to move with equities. And sure enough, equities have been going up in that environment, as we can see here. So if we break down that relationship up on top, you can see high yield bonds on the top and then treasury bonds collapsing down below. So if you are bullish of stocks, or if you are bearish of stocks, you're looking for that completion, that high yield bonds now catching down to treasury bonds that have already been collapsing. That would coincide with credit spreads widening, which is evidence of risk out there in the market finally being priced into the equities market. So I think the next, if you are bearish of this market, which I am positioned accordingly, and our bearish positions have been working, so we're adding to those, I'm looking for an expansion in the new lows list, and I'm looking for credit spreads to start to widen. In other words, that blue line at the bottom start to come down. That, in my opinion, is what would be next. We're shorting home builders. We're shorting individual consumer retail brands. We're been shorting coal, S&Ps and the NASDAQ, both of them, puts on both. We continue to position ourselves defensively. There have been longs that have been working, and to be fair, they certainly have. It's just fewer and fewer of them have been working. If you've been paying attention, more and more of them are not working. So I think that trend continues.
Hey guys, Howard, Phil, JC, I'm so sorry. I had a 12 o'clock Eastern here. I didn't thought this was going to be over at the hour. I don't want to pop off.
No, we'll let you run. Awesome to have you. We'll have you back. Thanks, buddy.
Thank you so much. This is so much
Chris,
fun.
Thank you, Chris.
Good to meet you.
Great.
Thank you.
Great stuff.
So we've got Chris's idea, which is fantastic. We'll check in on that. We have JC.
Short Apple below 180.
Short Apple below 180. Short some home builder. Short some interest rate sensitive stocks. I'm going to share one idea, which goes counter two ideas. One is this AI hype is pretty much the silliest thing. I'll pull up a couple charts if they can about the venture investing going into AI right now, which is like dwarfing what happened in the mobile venture boom. And mobile gave us the Android and the iPhone and the cloud and Amazon Web Services. Here, state of the markets, first half 2024. In every investment hype cycle, so this goes to truth. Like Chris is on the ground in Austin and investing in private companies around this space, and I think a lot of what he says is dead on. And the hype, though, is what other people will tell you these robots are going to do, which is, which is in every investment hype cycle, sector dominates. AI just recently surpassed mobile's peak in its relative size, 20% of all VC deals. So I have this anecdotally from my calls with Andreessen and other firms that are only looking at AI deals. And I have this now with the data from SVB. And it's just, you hear it on Twitter all day and CNBC, right? Where they're just talking about AI. And AI is cool, but I got to say, I don't use it, right? I use Gmail's 10-year-old AI. And I just don't think the business model or hype is there. So be careful. NVIDIA's earnings are Wednesday. I don't have an idea here other than my sensors say we got a lot more to prove. I'm very excited about AI as it applies to stock twits and stock picking and community and efficiency. But I think the market is valuing it.
I think the short is
crazy,
AMD.
like hype cycle.
I think the short is AMD on the semis. AMD didn't make a new high. Love the relative weakness below 165.
Okay.
If AMD is below 165, it's a short. I think a lot of downside coming.
I just think AI. I mean, do you use ChatGPT, JC?
I have 3 kids, Howard. So
Okay, so you don't use anything. You use eye goggles.
I'm lucky I brushed my
using
teeth this morning.
ChatGPT? No. Phil is not.
No, I do.
We're probably not the
I
right
use
audience.
ChatGPT for fun, not for work, for fun.
My kids use it. So no, I have a doodle here. So here's how I see this, that this is a secular bull. And within the secular bull, you're going to have these cyclical bulls and bears. And so I think this is my take on what you guys are describing right now, that we are in the midst of this massive secular bull related to technology, AI times robotics, AI times whatever. And that's this whole squiggly line. But during that, we have these shorter periods, these more cyclical periods where we may be at the top of a cycle right now. And the things that you see at the top of a cyclical part of this larger trend is everybody talking about it on TV, everybody talking about it here and there, people getting way overhyped about it, NVIDIA having these ridiculous, shorter term moves. So that's my view of what's going on right now.
We're near some kind of place where you should be a little more careful. But there's, like I said, Intuitive Surgical breaking out, healthcare looking interesting.
The medical devices look good. The ISRG short term,
and they didn't look good for a while.
Messy,
they didn't look good for a while. Yeah. So the other idea I have, and I haven't had a crypto idea since Solana.
I gotta help myself, guys. Howard, love you. Pearl Dog.
Adios, buddy.
The one idea I was just going to share before we go is Render. This goes to this kind of an all-time high area for, you call it a shitcoin, I call it a blockchain. I own some. It's obviously, like all blockchains, a lot of hype. The people who are making money in this have made money in other blockchain. So take that with a grain of salt and understand, the biases. But this really is strong. And I would say technologically wise and story wise, this distributed GPU of rendering on the blockchain as people need more processing for AI and for the toys of making 1 minute videos and using Solar or all the graphic imaging that's needed and the media explosion that we're seeing. There is a great story around this and basically at all-time highs. Right. Anybody that owned this back in 2022 during the bubble, 2021 has been washed out. So in my opinion, this is like just an interesting, we saw Solana kind of break out. And so I'm interested in this one. Very speculative, but been adding a little bit just personally, even though I already own it. So that's my one idea. The other one that I thought Phil was super interesting when we talked about abundance is McDonald's. I mean, we talk about render and then go to McDonald's. It's fascinating about this McDonald's chart is, first of all, how it's crushed the S&P, Phil, right? Just burgers and fries and, what it's wrought on this world, right? Meaning the reason we have Ozempic is because of this chart, right? Like the reason Ozempic is growing the way it is because of McDonald's, pretty much. It's the cultural built-in, food habits of this country, which have massively outperformed. It's kind of ironic here that you have this massive outperformance of McDonald's for decades, and it could be now a decades of unwinding where McDonald's has to go healthy because poor people can't afford their food because of inflation, right? There's articles going around that poor people can't even afford McDonald's anymore. So how ironic that McDonald's has become like middle income, right? Has to go healthy. And at the same time, the pain it's inflicted on the nation in terms of bad eating habits and calorie intake has led to Ozempic's chart. So you could overlay kind of McDonald's probably going sideways for a decade. I wouldn't be surprised, versus us fixing that societally with Ozempic and Eli Lilly and Novo Nordisk. So that's super interesting how this trend kind of resumes, because inflation at the McDonald's level is high, right? The average person ordering a Big Mac, it's not cheap anymore, right? So people have to really dumb down their food beyond McDonald's to survive. So that, two opposite ends of the spectrum, right? This show, we were talking about robotics, we're talking about McDonald's, and we're talking about blockchain all in the same episode. And then, Phil, you were going to end with abundance, right? Like in all this, think about this. You have to go from blockchain to McDonald's to Ozempic to robots. And through all this, it's like, how do you manage all this coming at you?
So there's something that we didn't cover here, and that is this, that over, let's say, the last 20 years, we've had this incredible set of technological advances, especially Moore's Law and the power that's packed into our mobile devices now. We have this capacity to be so much more efficient. And yet, everybody seems more busy, right? So we're living in this age of overabundance. There's too much bad food, to your point about McDonald's. There's too much media noise, too much stress, too much data, too much stuff to get done in a day. And so we have a lot of people running around that are very, very busy and not getting enough sleep. And so from my point of view, one thing that we can all do, is try to embrace less. And the way that we could start doing that is to think about and find one thing that we're doing that's a waste of time. One thing that we're doing that we're wasting time on, because we only have so much time on this earth, right? Ask not for whom the bell tolls, it tolls for thee. We're all going to go. We only have a limited time on this earth. And so find one thing that you're wasting your time doing. For me, it used to be being on social media during the weekends, right? I would waste at least a couple hours, 2-3 hours a weekend on social media on the weekends. And I just gave that up. And I found an incredible amount of time for me to be able to go on a long run, wake up Saturday morning, go on an hour and a half, 2 hour run, found time to spend more time with my family and my kids, play lacrosse, go outside and throw a lacrosse ball, or go on a run with the kids, maybe cook a good meal. And so what I would do is, if I was you, living in this world of overabundance, you're feeling too busy, is to look for one thing that you can cut out that's a waste of time. Maybe it's a bad client. Maybe it's a client you have spent all this time on, you're making no money. And just adios, just jettison, because you only have a limited time to live and to be yourself and to have a good time and to enjoy your life. So I think that that's going to be even more significant. So I think
the both of us have done this. Like I said, the easiest time hack was removing apps from my phone, right? In the end, the only apps you need on your mobile phone are email. And even that's I don't see a way around email. Your calendar, Uber. You don't need any of this live streaming apps. Spotify, of course.
Yeah.
So I look at my home screen today and it's not even full anymore. I have room for 4 apps, meaning Google Maps or Apple Maps, Spotify, WhatsApp, I guess, from my friends internationally. But really just no Twitter, no Instagram on my homepage. I've never used TikTok. I like YouTube on the desktop. Twitter is just moving it to my desktop has increased, probably like you, maybe an hour a day for me. And now it gives me more time for strategy as we run stock twits. And you and I are helping me. It's like, how do we think about what we would do, lucky enough to have an eighth chance to build, to grow a community? And the way to grow a community is to cut off, clean up parts of the community, or spend more time on what's working in the community. And what wasn't working for me, and it's easy for most young people to cut this out, would be an app on their phone, right? It takes 4 or 5 days to get over the habit. Not long, considering sugar and vaping and all the other real vices that young kids are going to be facing. But probably the easiest hack that a young person can do would, even though it's much harder because that's how they were trained, is social media, especially on their phone.
Many people have multiple issues, right? So our lives, we're just packing so many things
try and
in.
Do one. I agree.
Especially talented people. Get rid of one, and there's you're going to feel a relief. You're going to have a little bit more time. You're going to free time up. But the secondary effect is you're going to learn that by getting rid of things, you're freeing yourself up to be more creative, to enjoy life more. So then that'll give you the capacity to go get rid of one other thing. So pick one thing. Maybe it's an app. Maybe it's a food that you eat that's really terrible for you. Get rid of it and then see how much better you feel. That is my tip for living in this world of overabundance, where, by the way, we're only going to have more overabundance. Yeah, right? We're going to have more as time goes by.
More time equals better to start getting better habits today. All right. Trends with Friends. Fun episode. We covered a lot of ground. We'll be back next week. Good luck with NVIDIA earnings, everybody. Thanks, Kiki and Jordan. We'll see everybody next week.
Adios.